Good day everyone, thanks for joining me. My name is Matt and I cover Naspers and Prosus. Today I'm going to discuss our latest report. In this presentation I'll briefly discuss the results which cover the full year financial results for 2021. Once again showed a meaningful contribution from Tencent and strong e-commerce growth. We'll look at the discount and discuss the valuation, and I'll just justify why we're keeping the recommendation neutral. The results were pretty good. Revenue on an economic interest basis increased by approximately 34%. Excluding the equity accounted investments, revenue grew 53%, driven by mainly the e-commerce portfolio where food delivery doubled and e-tail grew 65%. On aggregate, the e-commerce portfolio is growing very quickly, but it's still loss-making. The majority of the group's net income, of course, comes from Tencent, which had solid results itself. Core headline earnings were up 44.7%, and core headline earnings per share were up 43.3%. Naspers and Prosus had a very good 2020, but they've lagged the market this year and their discount to net asset value has widened. A big part of this reason is that the proposed transaction where Prosus will acquire 45.4% of Naspers by in shares is something that the market does not like. The performance of Tencent is divergent to Prosus and Naspers. Year to date, Tencent is up about 2% in Rand, where Prosus is down 14% and Naspers is down about 3.5%. The reaction to the results was pretty insignificant. The point I'm trying to make is as the Prosus AGM date approaches, where they're going to vote on the decision regarding this cross-holding transaction, Prosus and Naspers are under significant pressure. So the underperformance to Tencent has resulted in a widening of the discount to net asset value, and that discount is getting quite big and we need to start looking at it more closely. As that discount gets bigger and bigger, there'll become a point where the risk-reward profile turns and it'll be difficult to ignore. In our valuation, on face value, there's a lot of upside. We take a very conservative approach and value Tencent on less than the current market value and less than what our peer-based valuation on Tencent is, which is more than the market value. On Prosus, our target price after a holding company discount indicates a 20% upside, and on Naspers, our target price after holding company discount indicates about 28% upside. However, and this is a big however, if the cross-holding transaction is approved, we think that the structure becomes a lot more complicated and a larger holding company discount would be warranted. The transaction is going to be very difficult to reverse and it will therefore lock in that higher discount, and future attempts to realize net asset value will be compromised. Why we like Naspers and Prosus is because of that discount, and we hope that at some point that net asset value can be realized. If it's compromised, however, that changes things. So in light of this, we're maintaining our neutral recommendation for now, and we will reassess after the AGM. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk. Additionally, the reports on Naspers and Prosus can be found on MyBase. Thanks for listening. Please take note of the following disclaimer before we end off. Thanks.